Michael Saylor, the CEO of MicroStrategy, is a prominent figure in the world of technology and finance. He is known for his bold predictions and strategic investments. In recent years, Saylor has become a vocal advocate for Bitcoin, often referred to as digital gold. His company, MicroStrategy, has made significant investments in Bitcoin, acquiring billions of dollars worth of the cryptocurrency. Saylor's interest in Bitcoin stems from his deep understanding of technology and economics. He sees Bitcoin as a revolutionary technology that has the potential to reshape the global financial system. Saylor believes that Bitcoin is a superior form of money compared to traditional fiat currencies, which are subject to inflation and manipulation by governments. Saylor's public pronouncements on Bitcoin have made him a polarizing figure. Critics dismiss him as a reckless speculator, while supporters praise his vision and conviction. Regardless of one's stance on Bitcoin, there is no denying that Saylor's influence has helped to bring cryptocurrency into the mainstream. Saylor's journey into the world of Bitcoin is a testament to his willingness to challenge conventional thinking and embrace disruptive technologies. He's a true believer in the power of Bitcoin, and his actions speak louder than words. Bitcoin is often compared to gold, and for good reason. Both assets share several key characteristics that make them attractive stores of value. Like gold, Bitcoin is scarce. Its supply is capped at 21 million coins, ensuring that it cannot be devalued through inflation. This limited supply is a key factor driving Bitcoin's value proposition. Bitcoin is also highly durable. Unlike fiat currencies, which can be printed at will by governments, Bitcoin is resistant to manipulation. Its decentralized nature means that no single entity can control or alter its supply. This makes Bitcoin a reliable store of value, even in times of economic uncertainty. Furthermore, Bitcoin is easily divisible. It can be broken down into smaller units called satoshis, making it suitable for both large and small transactions. This divisibility makes Bitcoin a practical medium of exchange for everyday purchases. The comparison to gold is not without its limitations. Bitcoin is a relatively new technology, and its long-term value remains to be seen. However, its unique properties have led many investors, including Michael Saylor, to believe that it has the potential to become a dominant global currency. Inflation is a constant threat to the purchasing power of fiat currencies. When governments print more money, the value of each unit of currency decreases. This can lead to a rise in prices for goods and services, eroding the value of savings. Bitcoin, on the other hand, is designed to be deflationary. Its fixed supply means that its value is likely to increase over time as demand grows. This makes Bitcoin an attractive hedge against inflation. Investors see Bitcoin as a safe haven asset that can protect their wealth from the erosive effects of inflation. Central banks around the world have been printing money at unprecedented rates in recent years, leading to concerns about rising inflation. This has made Bitcoin an even more appealing investment for those looking to preserve their purchasing power. Saylor has been vocal about the risks of inflation, arguing that traditional assets like bonds and real estate are no longer reliable stores of value. He believes that Bitcoin is the best way to protect wealth from the ravages of inflation. His views have resonated with a growing number of investors who are looking for alternative investments in an uncertain economic climate. One of the key features that sets Bitcoin apart from traditional currencies is its decentralized nature. Bitcoin operates on a distributed ledger called a blockchain, which is maintained by a network of computers around the world. This means that no single entity, such as a government or financial institution, has control over Bitcoin. This decentralization makes Bitcoin incredibly resistant to censorship and manipulation. Transactions on the Bitcoin network are verified and recorded by multiple parties, making it virtually impossible to alter or reverse transactions. This transparency and immutability are essential for building trust in a financial system. Decentralization also makes Bitcoin more resilient than traditional financial systems. Unlike centralized systems, which are vulnerable to single points of failure, the Bitcoin network can continue to operate even if some nodes are taken offline. Saylor believes that decentralization is one of the most important aspects of Bitcoin. He argues that it is essential for creating a more equitable and accessible financial system that is not controlled by a select few. Section 5. Network effects, fueling Bitcoin's exponential growth. You see, the value of a network increases as more people use it. This phenomenon is known as the network effect. Bitcoin in particular benefits immensely from strong network effects. As more individuals, businesses and institutions adopt Bitcoin, its utility and value increase, which in turn attracts even more users. This virtuous cycle has driven Bitcoin's exponential growth in recent years. As adoption continues to rise, so too does the demand for Bitcoin, putting upward pressure on its price. The network effect is especially powerful when it comes to payment systems. The more people who use a particular payment system, the more likely it is to be accepted by merchants. This creates a positive feedback loop that benefits all participants in the network. Saylor, for instance, believes that Bitcoin is still in the early stages of its adoption curve. He predicts that Bitcoin will continue to grow in popularity and value as more people around the world realize its potential as a global currency. Section 6. Bitcoin, a store of value for the digital age. In a world that is becoming increasingly digital, Bitcoin stands out as a store of value that is perfectly suited for the 21st century. Unlike physical assets like gold, Bitcoin is easy to store, transfer, and verify. It can be accessed from anywhere in the world with an internet connection. Bitcoin's digital nature makes it particularly appealing to younger generations who are comfortable with technology and accustomed to transacting online. These digital natives are more likely to view Bitcoin as a viable alternative to traditional investments. Moreover, Bitcoin is not subject to the same geopolitical risks as traditional assets. It cannot be confiscated by governments or frozen by banks. This makes Bitcoin a valuable tool for preserving wealth in an increasingly uncertain world. Saylor believes that Bitcoin is the future of money. He sees it as a digital store of value that will eventually replace traditional assets like gold and real estate. Section 7. MicroStrategy, a testament to Saylor's conviction. Michael Saylor's belief in Bitcoin is not just theoretical. He has put his money where his mouth is, investing billions of dollars of MicroStrategy's corporate treasury into Bitcoin. This bold move has made MicroStrategy one of the largest corporate holders of Bitcoin in the world. Saylor's decision to invest in Bitcoin was met with mixed reactions. Some analysts praised his foresight, while others questioned the wisdom of betting so heavily on a volatile asset. However, Saylor's conviction has only grown stronger over time, and MicroStrategy has continued to add to its Bitcoin holdings. The company's Bitcoin investments have paid off handsomely, generating significant returns for shareholders. MicroStrategy's success has inspired other companies to consider adding Bitcoin to their balance sheets. MicroStrategy's Bitcoin strategy is a testament to Saylor's belief in the long-term potential of Bitcoin. He sees it as a strategic investment that will generate significant returns for the company and its shareholders. Section 8. Empowering the unbanked, Bitcoin's global promise. Billions of people around the world lack access to traditional banking services. This financial exclusion prevents them from participating fully in the global economy. Bitcoin has the potential to empower these unbanked populations by providing them with a secure and accessible way to store and transfer value. Unlike traditional financial institutions, Bitcoin does not discriminate. Anyone with a smartphone and an internet connection can open a Bitcoin wallet and start transacting. This makes Bitcoin a powerful tool for financial inclusion, particularly in developing countries where access to traditional banking services is limited. Bitcoin can also help to protect people from hyperinflation and currency devaluation, which are common problems in many developing countries. By providing a stable store of value, Bitcoin can help people to protect their savings and build a better future. Saylor believes that Bitcoin has the potential to bank the unbanked and create a more equitable global financial system. He sees it as a tool for social good that can empower people around the world. Section 9. Addressing the critics, energy and volatility. Bitcoin is not without its critics. One of the most common criticisms of Bitcoin is its energy consumption. Bitcoin mining, the process by which new Bitcoins are created, requires a significant amount of electricity. This has led to concerns about Bitcoin's environmental impact. However, it is important to note that the Bitcoin network is constantly evolving to become more energy efficient. Additionally, many Bitcoin miners are now using renewable energy sources such as solar and wind power to reduce their carbon footprint. Another common criticism of Bitcoin is its price volatility. Bitcoin's price has been known to fluctuate wildly, which can make it a risky investment for some. However, Bitcoin's volatility has decreased over time as the market has matured. Moreover, Bitcoin's volatility can also be seen as an opportunity for traders and investors who are able to capitalize on price swings. Saylor acknowledges the concerns about Bitcoin's energy consumption and price volatility. However, he believes that these are short-term challenges that will be overcome as the technology matures and adoption grows. He argues that the potential benefits of Bitcoin far outweigh the risks.